Good evening, everyone. Welcome back to another video. This video is a little bit different. This is a little bit special. Usually what we discuss in the market is price and time analysis using time cycles, using your Elliot wave structure. But in this video, I wanted to discuss something called volume analysis, right? And I wanted to show you how the smart money traps the retailers, all right? This is a story of NIFTY on 12th June and 13th June, right? I have taken this time frame to show you clear-cut examples. But before that, I want you to know why. Why do we study this volume analysis and what it can tell us? So let me take you back into the 1900s. There was once, let's call him a veteran soya bean trader called Mr. Morgan. And Mr. Morgan is very well known in the industry back then. This is just an example I'm telling you guys. At the time, technical analysis was booming, all right? It just started and the word started spreading that technical analysis is the next way forward for the market participants. So there was this new technical analyst. His name was Young Charlie, right? Let's call him Young Charlie. He was able to predict the market top and bottom using technical analysis. So Mr. Morgan was an old time trader, fundamental based. He used to trade soybeans, and he was curious to find what this technical analysis is. And by the time Young Charlie was getting famous in the community in the Wall Street, and people were, following his recommendations or looking for his analysis and trying to learn from him. So one day, Mr. Morgan, he calls Young Charlie. He calls him to the office in Wall Street, in his office in the stock exchange. And that time he tells Young Charlie to predict the bottom of soya beans that day. All right. So Young Charlie, a crowd gathers and Young Charlie predicts the bottom and he leaves it. So there's a lot of people watching, and Young Charlie and Mr. Morgan are eagerly waiting to see what happens in the market. All right. So day passes through and there's nothing happening. Soybeans is trading flat, and suddenly after lunch there is a news breakout that a shipping container having so and so loads of soybeans has been wrecked, or something happened to the ship and there might be a spill. Okay, so some news travels fast and suddenly the price drops. In a few hours, what happens is, couple of hours, the news comes back that the ship is only half damaged, or there's nothing much happened to it, and the food is safe. So the market starts to rebound back. All right, the market starts to rebound back, and to everyone's surprise, to Mr. Morgan's surprise as well, price exactly, it bounces from Young Charlie's level. So Young Charlie's, who calculated the level well in advance, right? So price bounces from there. So everyone starts to celebrate and cheer for Young Charlie, that yes, he is definitely a prodigy. Now, what does Mr. Morgan do? He simply calls his traders from the landline in his office. He calls his traders in the pit. He says, what is the highest quantity of buying order happening in the market? They say around 10,000 or so and so lots or whatever. So Mr. Morgan says, sell the equal amount and then sell 10 times. He tells his traders in the pit, sell 10 times the amount what is being bought. The highest buy order, sell 10 times of that. And suddenly out of nowhere, the price crashes immediately, and the low which was predicted, that also breaks. There is a new low formed in the market that day. So what did Mr. Morgan do? Simply, he saw that the retail public started buying it. Okay, suddenly they started buying it, and he sold 10 times that. He broke the bias of the low, and when they saw that new low is forming, all the retailers who were buying, they came back to sell their quantities. They were trapped. So when they started selling, that's when Mr. Morgan started booking his profits. All right. So let's come back to our charts. And now let's quickly look at the candlesticks of volume. Now, basics you need to know. It's not a complicated process, only the basics. You have your regular candlestick, right? You have a green and red regular candlestick. Now, all you need to do is to understand which side is the buying, which side is the selling. So if you can see in your screen, I have marked towards the left of the candle is all the sell orders or selling pressure. Let's just call it just basics. Yes, there are many ways to interpret it. I'm not going to teach you here volume analysis. I'm just helping you understand the candlesticks first. Towards the left of the candle is your selling. Towards the right is the buying. Okay, so a regular candle, just a normal regular candlestick, towards the left buying and towards the left selling. Now there's something called delta. So delta is nothing but the net volume there, meaning the sellers minus your buyers, whichever is higher, that will show that. So we have a color code for red means more sellers, green means more buyers. All right. So let's get into the charts. Let's have a look what happened on the 12th of June. So on the 12th of June, which is a Wednesday, you see that there's a good buying pressure which came in the market. So this is Nifty spot 15-minute chart. Okay. So there was a good buying pressure which came into the market in the morning, right? Now, be aware that 9:45 onwards, all right, 9:45 onwards, you see that there is a green color candle with a red delta, right? That means the price has gone higher, but the buyer who was buying the market, he started booking profits. Price is going higher, and the volume tells us that there is net selling in that candle. All right. So this was the update I gave in the Telegram group at that time. So watch out. There has been selling in from 9:45 itself. Then very next candle, again green candle, a bit doji like, but still there was selling in the market. All right. Then what did the smart money do? It faked. It made a small fake out here and it pushed the market higher. So they started booking profits. They are going to bring the market down, but they need to trap the retailers. Very simple. They need to trap the retailers. So what happened here? At this point, very simple. They bought the market up. You can see a red color candle formed here, right? There is a red color candle, but your delta is green. So they bought the price higher. They started pulling in more retailers. So retailers started buying here at this point. All right. At this point, which turns out to be day high at that time. It turns out to be day high. And how did we decode that later? I'll tell you. What happened here was retail started buying and the price started dropping. Right. The price started dropping. So those who were booking their profits, the smart money, they were booking their profits from 9:45 itself, right? And then they bought the price down. In every candle, you can see that retail was buying, retail was buying, retail was buying. Price was continuously dropping. All right. In this point, there was a green candle pull back higher. Then what happened? This was the point where retail exited their traps, meaning they were trapped here. The buyers were trapped. They converted from buying to selling, retail selling. And then instead of price going down, it went higher. Very next candle, what happens? I'll tell you, I'll show you. It's right in front of our screen. There was a very good spike in the market, correct? Very good spike. Everyone's thinking this is okay, a lower high in the market. And around 11:45, we get a good spike in the market. In this spike alone, there is huge amounts of selling pressure. There is huge amounts of selling pressure. Now, don't look at the delta value like minus 1.9 million. That's not necessary. The values are not important, but try to understand the mechanics happening in the market. All right. So first, already retail was trapped on 12th high. A secondary low was formed, and then a pullback in the market. Correct. So retail, what it did was it was looking to exit their traps and go opposite. So there were buyers here. Now they are sellers when the price is going higher. Okay. Price has gone higher. Very simple. It went into a consolidation state. It went into a consolidation state where there is net selling in all the candles. Consolidation and huge amounts of net selling. This is what I saw in the live market, and I updated it in the Telegram group. All right. If you're there in the Telegram group, I think you should have got the message that yes, there is some huge selling volume, and I told you very clearly we are going to see a trending move soon, right? So price was not moving anywhere, but there was huge volume being built up. All right. So before the fall, right before the fall started, what happened? There was a sharp fall and then immediately spike up. Okay. Immediate spike up. In this spike, you can see that this is around 1:30 on 12th June. In this spike, you can see it made a doji reversal kind of pattern. Okay. Made a doji. But in that, what happened was there was net sellers in the market. There were net sellers. So what did the smart money do? It pushed the price higher. It trapped all the retailers and they sold. The smart money sold here. And then market started to fall immediately. Okay. Market started to fall. Retailers were trapped once again just before the fall. So what are you seeing? A small pattern here. The color of the candle, the structure, and delta. Sometimes they don't match. Okay, they don't match. So that tells us something fishy has happened or somebody has been trapped. This entire thing is being done by the same guy or same entity or same group of people, whatever you want to call it. We call them smart money. Same people who were buying in the morning. They have become net sellers in the market. Very, very simple. What happened in this candle? Huge fall as well as good selling pressure. Now, they need to cover their position, correct? They need to cover their position, but those people who are net buyers who got trapped here, they started to cover their positions here. They started to cover their positions here. So there was a good battle here, two kind of a doji patterns. You can see that this was a red color candle with green color delta. Let me zoom in. A green color delta with a red candle, meaning what? There are net buyers here, but the candle is red. The candle is red. There were net buyers. So when the retail people started to sell in this candle, the smart money came and started covering their shorts because they found liquidity. They found liquidity. Going a little bit forward, around 245, what happened? Very simple. As soon as a spike comes above, so first green candle, this opened and went higher. Okay, it opened and went higher. Smart money around 245. What did it do? It immediately sold. So you can see there's a red candle, reversal type candle doji, but there are net buyers. So there is somebody who has got trapped here, and immediately the price starts to fall. Immediately price starts to fall. So now what happened? Retail public is net sellers in the market in this down move. Okay. Smart money, sorry, retail people are net buyers. My mistake. Retail people are net buyers. Smart money has taken the market down. So retail is trapped. Retail is trapped here, net buyers. And if you see the value of delta from 2.3 million, it becomes 374,000. So smart money has covered their positions here. Okay. Shorts have been covered here. All right. So this is exactly what happened towards the end of 12th June. Now, what happened on your 13th June? This is where the fun starts. This is where the fun starts. This is the candle where you must understand this was the same candle, same pop pattern in the 3rd of June. The exit poll results, the first candle was exactly like this. what happened? If you see this candle, this is a 5-minute chart of the first candle on 13 June. All right. First candle immediately gap up. There was huge selling pressure. There was so much selling pressure that everyone who was trapped earlier, the fresh people who came to buy, everyone who wanted to exit their shorts, and fresh buyers, total combined, they could not beat this seller. If you see this seller on the left side, now there's some pink, right? You can see this pink highlight. So this is an imbalance. This is called an imbalance. Which side is the imbalance? It is on the seller side. Okay. So there is a selling imbalance in the market, meaning there is overpowering of sellers. Selling pressure is very, very high in simple terms. So 0, 0, 0. It does not mean there are no buyers. It means all the buying pressure has been absorbed and still there are more sellers. So the exact open was the high of that day. Now, question is, how did we know, or are we expecting a fall to come? Are we going to buy there or not? We are not the dumb money. We are studying Elliot Wave Master. We have studied the Elliot Wave Master course. We know some structures, and I gave you an update one day before. Okay, we'll discuss that also. But first, let's look at the volume analysis of 13th. Here, full selling pressure. Okay, towards the end, what happens? Towards the end of this candle, this is the first 5-minute candle, you see that there are no sellers here, only buyers. Only buyers. So the same person who sold, the smart money who sold in the morning, the first candle in the morning itself, first part, here he started to cover his shorts. Okay, here he started to cover his shorts because enough retail liquidity has come. Retail people started selling. Once they saw this fall, towards, it was very fast. Towards the end of this candle, they started selling. So what did the smart money do? When retail public started to sell, the smart money started to buy. Smart money started to buy, and there was net buying positions in this candle itself. Huge red candle, but there are net buy orders. Okay, so the retail public was completely absorbed here. And what happened next? Prices pushed higher. Red color candle with green color delta. What does this mean? Very simple. It means somebody is getting trapped in this zone. Okay, so retail is what? Retail is now net buyers. In the first candle, retail started to short the market. Correct? Here, retail started to short the market. Smart money is buying. Smart money is waiting for more liquidity. Very simple. Retail saw fast fall. They started to sell and they got trapped. Now, what is happening? Price went sideways for some time. It went sideways because they are waiting. Who's waiting? Your smart money is waiting for more buying pressure to come. Okay. So what happens? They took the price higher. The prices came higher. It went sideways. A red color candle with green color, this thing. So what happened? There's net buy orders. Who's buying here? So the retail is net short. More shorts are coming from retail side. Smart money started covering. Smart money started covering their positions. You can see here, red color candles. This is again only in the first 15 minutes, 15-20 minutes, what's happening. So retail is trying to short the market. Smart money is trying to cover their shorts from the top. So what do they do? One single spike here. What happens here again? This is the new day low at that time, around 9:15, right? 9:15 candle was the day low. What do the smart money do? They bring in one more drop in the market. One single drop, enough. That's how retail are nowadays. One single drop and reversal candle. The retail public, those who are shorting, they have become net buyers here. They have become net buyers. They were trying to short the market, right? In that, they're trying to cover. The smart money is trying to cover. And over here, 9:30, smart money does a reversal type of candle, and The retail public changes its position. Retail public becomes net buyers in the market, and there is net shorts created. The net shorts which are created by smart money is added on. So what happens after that? After this trap, again green color candle, red color delta, price starts to fall continuously. It goes down and down all the way. All right, this is around 9:45. You can see a reversal type candle, doji, red color candle, and the retail who are now trapped in the market, they are trying to sell the market here. They became buyers on this candle. Okay, they became buyers around 9:30. They became buyers around 9:30 after seeing this reversal candle. Now they're seeing the price start to fall, so they are trying to sell here. Since now retail is going to sell, the smart money is buying here. It's very clear. You can see a red color candle with green color delta. Red color candle with green color delta, meaning buying pressure has come at this level. But retail now is selling. So sellers, retail sellers, smart money starts to buy. Okay, smart money starts to buy. Price goes higher again. A lot of sideways momentum for some time. Lot of sideways momentum, and this zone, right, this zone is the same zone of the previous day, same zone of the previous day, where from 2:45, this is 12th June, right, 2:45 onwards, you see there was a trap in the market. So the same zone I have extended. This is called something called a value area. Okay, so point of control value area is not necessary for you in this video. Maybe next time I'll explain, but there was a value area and then I extended it forward. What happens then? Very simple. A green color, this is a 15-minute shot, a green color candle forms and there's red delta, meaning there's a net sellers who are trapped. Let me show you the 5-minute chart again. It's very clear. There's huge selling pressure before the selling starts. Again, before the selling starts, a spike up in the market around 11.5. A spike up comes in the market, and guess who's buying there in that spike? Your retailers are buying in that spike. Okay, now they wanted to get out of the shorts which they were trapped. They want to become buyers because there's a spike up. Immediately the your smart money starts to sell. Green color candle, red color delta, net shorting is happening. Market falls down. Red color candle, red delta, good, 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 good. At this point here, what happens? This is the same zone of yesterday, the previous day, 12th June. Here, huge green color candle, meaning at this point, huge selling pressure has come from the retail public. The retail who were trapped here, now they have become huge sellers because market is following continuously and new day low. So smart money gets the chance, it reverses everything, it creates the bottom of the day. Okay, it creates the bottom of the day, and again towards the end of the day, what happens is very simple. Price goes higher. Okay, price moves higher towards the end of the day. Red color candle, green color delta. So price is moving higher. Smart money traps retail again here in longs, brings the market down. All right, it brings the market down. You can see now the retail have become net sellers because of the spike in the market. So what does the smart money do? Smart money are buyers here already. They bring the market close to their buying level. They enter into longs. So it created a doji type reversal, but this reversal candle has net sellers, meaning little bit net sellers. So the retail gets trapped again here. After that, market closes in a sideways mode, but there is full buying pressure here, net buying pressure, and market gaps up the next day. And again, the same cycle starts of trapping and not trapping. So this is not a story of only 12th and 13th. This is an everyday story. Okay, this is an everyday story. So what were we expecting in the market? We were expecting this to happen because we were expecting an A, B, C pattern and then a fall down as D. Then again, we were expecting the market to rise. right? This was the video analysis I shared in the midweek. Okay, so here it's very simple. If you are a retail trader, if you were trapped on the expiry day, if you didn't understand what is happening in the market, it is very simple. You can only cross this hurdle of traps if you understand market structure. We have an entire course available in English, Hindi, Tamil, and Telugu in this YouTube channel called the Elliot Way Master Course. Please study that. It's very, very important. So right now, I've already shared the analysis for next week, what is going to happen or what is the expectation. We have 23,517, 23,517 level, right? Above this, we cannot consider this pattern as an ending diagonal anymore. We have to consider as a fifth wave of a different nature. So I already told you, if prices crosses this, I've already shared everything in detail on Friday itself. If price crosses this level, I'll play only intraday. Now, intraday levels, if you want this kind of analysis, everything is available in the Telegram group. The link is in the description. Kindly join there, right? Here, 23,517, if price goes above this, I will only focus on intraday. Why? Because this will be a fifth wave of some degree, okay? And then after this, it is going to fall anyway. If price is not able to fall or not able to cross 517, we know that we are expecting already 200-point fall in the market, right? At least till here, 240 till 200. This is our expectation. This is a conservative expectation. Till here, it should come. It can go below that to 23,000 also. But for now, this is our expectation. Okay. If you fail to cross 23,517. Now, time cycle wise, I've already explained this many times. 7th to 13th was supposed to be a correction in the market, right? What if the market does not do a correction and does the opposite? Meaning 7th, it creates some swing low, and 13th, it creates some swing high. Okay, 13th or 14th. Instead of correction, we do the opposite. That is also possible. Now it's a very important time zone. What is the market doing? Did it reverse from an inversion state? Did it start making a swing low and starts going higher? Then it could possibly go till 21st and even towards the end of the month. But if a high is in place, now, or 18th make a new swing high and fall, that can also take the market down till the 25th or 26th of the month. All right. So far, I hope something new you have learned. And if you have, definitely do like and subscribe. And this kind of content is what I'm aiming to provide you guys with. I'll see you in another video, guys. Thank you so much, and definitely do share it with your friends. All right. I'll see you in the Telegram group on Tuesday for your intraday levels. Thank you and be safe.